Hello, my name is Glenn and welcome back to the Cryptonest. Today I want to talk to you guys about the US Fed getting ready to print $425 billion for New Year's, which is actually 3 times Bitcoin's market cap. I want to go over some information here about Bitcoin and quantitative easing and why I think that quantitative easing could actually help Bitcoin to come further into the forefront, mass adoption. I want to go over about German banks boosting Bitcoin and Germany proposing some new laws that would allow banks to hold Bitcoin. So if you find any of this interesting, stick around to the end. You can subscribe for me and click the little bell notification so you can be notified every time I release a new video. That'd be great. One other thing, I do have a giveaway coming up. I have a book that I had mentioned to you previously, Bitcoin and Blockchain Manual, written by Robert Beatles, that I would like to give away on the channel. I'm going to do that when I hit 100 subscribers. We're about 30 right now, so I've got a few more to go. If you all would share my my videos and get them out there to as many people as possible, so I can go ahead and do that giveaway and get one lucky person this really awesome book that Robert Beatles wrote, I'd really appreciate it. I'm here for you guys, and I want to give back to you all. I thank you all for being here. I thank you for taking the time to be a part of the channel and to listen to what I have to say and to be here with me. So thank you very much. And having said that, let's jump right into this here. The US Fed is going to print $425 billion for New Year's. The United States Central Bank is going to inject at least $425 billion of non-existent money into the economy by the middle of next month. And this is in a statement released on December 11th. The Federal Reserve confirmed it would ramp up so-called repurchase or repo operations on the key dates over the next year. We've heard a lot about inflation and how the Fed is printing money. This isn't exactly the same as printing money like quantitative easing. We'll get into that, and I'll explain the difference here in just a moment when I get into the next article here. But they are going to start their next round of what they call repo offerings on December 31st to January 2nd, which will be approximately 150 billion. And by the January 14th deadline, the minimum the Fed expects to generate is 425 billion through the use of their repurchase agreements. Now, they're saying everything's fine, and while common, such moves involve conjuring past new liquidity based on zero backing, essentially money printing without physically printing any money. As I said, we'll get into that in just a moment. Critics, especially in Bitcoin circles, have long highlighted the policy as an example of the failure of central banks to manage economies. The argument forms a central tenet of Saifedean Ammos's popular book, The Bitcoin Standard, in which he argues that the fall of nations and empires stems from the fall of a currency that is not allowed to operate free of manipulation, such as like quantitative easing and these repos and other things that the Fed does to try to maintain and sustain interest rates where they want them. Commenting on the most recent Fed announcement, Bitcoin advocate known as Rhythm on Twitter noted that 425 billion is over 3 times the size of the entire Bitcoin market cap. But everything is fine. He ironically summarized. Yeah, I'd have to go with his irony on that one. I tend to believe things are not fine, but that's my personal opinion. As Cointelegraph previously reported, U.S. national debt reached 23 trillion in November. I mean, trillion with a T, and around 12 million for every Bitcoin that will ever exist. And that figure is now at 23.12 trillion, according to the online monitoring resource, the U.S. National Debt Clock. Now, if anybody's ever seen this before, I don't know if you have or not, I'm going to go ahead and open this up. But if you look at our national debt clock, here we are, 23.12. And look at how fast these numbers just keep going. Our national debt is just going crazy. And it's not going to slow down anytime soon. So, BTC and quantitative easing, what's the correlation to cryptos? This article is a little bit long. I'm going to try to jump through it real quick here, but it makes a lot of really valid points, so bear with me. And in 2018, the executive on the board for the European Central Bank, they declared Bitcoin the evil spawn of the financial crisis. We all remember 2008 when the housing market crashed and everything went down, the banks went down. Well, this was the evil spawn of the financial crisis, referring, of course, to the economic disaster 10 years prior. Interestingly, also born from the ashes of the mortgage crisis was the United States government's adoption and unabated use of quantitative easing, which I find very interesting because here we have the government that decides, oh, let's just go ahead and start printing more money to solve our problems. And then we have this persons, organization, group, whoever it was, Satoshi Nakamoto, who decided, let's create Bitcoin. And Bitcoin is so to the contrary of everything that the government. It just goes to show two different trains of thought, two different schools of thinking. You know, the government, they just want to print more so they can keep doing what they're doing. They don't want to actually make any change that's going to make anything better, at least in my opinion. Now, however, according to some, there is more of a connection between Bitcoin and the government's use of quantitative easing than just their origins. A recent tweet from BitMEX CEO Arthur Hayes highlighted this supposed correlation. BitMEX is, for those that don't know, is a major leverage exchange for trading Bitcoin. He says, QE forever is coming. Once the Fed gets religion again, get ready for Bitcoin 20,000. So he's basically relating and correlating the fact that as more and more quantitative easing comes on, more and more people will turn to Bitcoin and it will help to drive the price up. Nodding to the Federal Reserve's latest decision to pump the economy with billions of dollars, Hayes brazenly suggests a relationship between a growth in Bitcoin's price and an increase in QE. But is this idea entirely out of the realms of possibility? I don't know. What do you think? Drop me a line, drop me a comment down below. Let me know. I'd love to hear your thoughts on this. Personally, I tend to agree with Arthur Hayes here, but that's just me. So banks all over the U.S. Oh, by the way, I forgot to say in the beginning, this is an older article. This was back in September. So although the information is still good, some of it's not like relevant as far as like today goes. So when they're talking about Thursday, they're not talking about 2 days ago. This was a couple months ago. But anyway, banks all over the U.S. ran out of cash as interest rates in the overnight market, a platform reserved for interbank lending, shot up to 10%. Of course, this forced the feds to act, and on Tuesday, $53 billion was added into the financial sector in what they are known as overnight repo operations. The Fed also spent $40.8 billion on treasuries, $11.7 billion on mortgage-backed securities, and a further $600 million on agency bonds. You know. Same thing, I guess. At this point, it's all going to blow up in their face. In the end of the day, at least in my opinion. These economic strategies that they're using will not continue to hold water, I don't believe. And this is all an attempt to lessen the borrowing costs from the proverbial line in the sand. So, on Thursday here, the Feds back in July on Thursday announced that they were going to cut the rates and bracing the market for an additional $75 billion on Friday. Yet they did go ahead and put another $75 billion in capital injections, which is in total of $278 billion funneled into the markets. That's a lot of money for the Feds to just keep dumping into the market. Finally, the Fed did away with the daily charade and announced that further operations would continue regularly through to mid-October. Previously, sky-high repo rates declined following the injection of $278 billion. They're just going to keep, they decided to just come clean and tell everybody they're just going to keep printing money until they don't need to anymore. Federal Chair Jay Powell, he mostly brushed off the repo operations, suggesting that they were integral in the smooth running of the market and they had no implications for the economy or the stance of monetary policy. And he wants us to believe that. Okay. These repurchasing agreements or repos. Now, this is where I said a few moments ago we're going to get into the difference between a repo and quantitative easing, because there is a difference, and I wasn't fully sure exactly what they were talking about when I started reading this, so I found this very interesting here. But these repurchase agreements or repos typically involve the overnight lending of government securities on the open market, with distributors selling to investors with the expectation of repurchasing the following day. Now, while these generally take place between financial institutions, once in a while the Fed will get involved, entering into agreements to regulate the monetary supply. This latest flurry of investment marks the first time in over a decade that the Fed has intervened with a repo agreement, with the last being the 2008 global financial crisis. They haven't done it since 2008, and now they're starting again. I don't know how to read into that, but it doesn't sound good to me. Once again, drop me a line, drop me a comment, let me know what you think. It's the Goldilocks paradigm. It's perhaps important to make a distinction between the Fed's recent repo agreements and quantitative easing. So this should help people understand a little better. I know it helped me. Broadly speaking, while open market operations are an inevitable stop towards quantitative easing, these two policies differ significantly. To use a reasonably reductive explanation, within repo operations, the Fed uses reserves to buy government assets such as treasuries on the overnight lending market to influence interest rates, whereas under quantitative easing, The Fed prints money, or rather generates it electronically, and uses it to purchase securities with the direct intent and consequences of expanding the monetary supply. One is just printing, and the other is basically refinancing, I guess you could say, with these repo agreements to get more money back into the government. So QE is typically used as a last resort for the Fed, and this last resort comes when it fails in mandate to keep interest rates in their designated sweet spot. So thus we have the principle of a Goldilocks economy. If interest rates climb too high, pricing people out, a recession can occur. If it's too low and there's a risk of excessive economic growth, inflation, and subsequent currency devaluation. Currently, the pressure from rising lending rates is forcing the Fed into a corner by which it needs to reduce its target to maintain an equilibrium. However, with 4 consecutive days of repo transactions last week and a new pledge to continue buying government assets, it looks like quantitative easing could be next on the agenda. It doesn't surprise me at all. It really doesn't. Can quantitative easing act as momentum for Bitcoin? Well, while the objective of quantitative easing is to revitalize the economy via low rates, it can also drive investors to diversify more risk into their portfolios. It helps to take away some of the trust that people would have in the American dollar or, fiat currencies around the world, helping to drive people into more risky things. So speaking to Cointelegraph, Alex Kruger, a cryptocurrency trader and economist, explained that this expanding desire for risk may entail for Bitcoin. QE would push longer interest rates lower and thus push some investors out of the risk curve, i.e. seeking riskier investments to achieve the desired returns. One can theorize some of that money would end in Bitcoin, adding upward pressure to the prices. This was also reflected by the International Monetary Fund, or the IMF. They went ahead and they said that prolonged monetary ease may also encourage excessive financial risk-taking. And thanks to its widespread stigma as a risk-on asset, Bitcoin could, in theory, reap some of the benefits afforded by increased demand for the more perilous investments. That's two. We have Cointelegraph, Alex Kruger here, stating that quantitative easing could be good for Bitcoin. We have the IMF stating that people could look for more riskier investments, thinking that Bitcoin is a more risky investment. Matty Greenspan, eToro's senior market analyst, noted this while talking to Cointelegraph, suggesting that some of that money will likely be channeled into Bitcoin. So why Bitcoin? The nascent protocol is known as the antithesis of the financial system. It was born literally to oppose and subvert traditional banking. With such an option at their disposal and with growing concerns of a systemic collapse, it's not inconceivable that people are turning to Bitcoin for capital refuge. You hear me talk about it in my videos all the time, how I'm trying to get away from the banks, how I'm trying to put my money into different types of decentralized financing, different wallets where I can achieve higher rates of interest, where I can pay lower rates of interest on loans and things of this nature. I definitely am looking more and more to work myself into a cryptocurrency world environment and created a channel here to help all of you learn how to do the same. So it's definitely not inconceivable to see that people are turning to Bitcoin. And actually my channel, although slow, is starting to grow. And I've seen many other people, many other influencers that I follow on a regular basis. I've been watching their channels grow considerably. So the interest is definitely here. A somewhat darker theory, as interest rates decrease and the monetary supply rises, domestic currency inflates and it loses its value. So as we all know, every time the Feds, print more money, the dollars that we have in our pocket becomes worth less. So for Bitcoin believers, this is just another sign of the imminent collapse of the financial system. And with the de facto world reserve currency on its last legs, Bitcoin's purported role as the macro hedging is becoming more of a reality. Broadcaster Bitcoin bull and fiat doomsdayer Max Keiser is one such propagator of this theory. And in a conversation with Cointelegraph, Keiser suggested that much of Bitcoin's value is based on the denigration of the financial industry. I don't necessarily want to see the whole market crash. I don't want to see the economy go tank. I don't want to see everything go sideways and go belly up. However, the more these types of things happen, the more our financial system collapses and implodes in upon itself. Obviously, the more and more opportunity there is for Bitcoin and cryptos to take over. Max Kaiser had stated that quantitative easing, debt monetization is designed to keep zombie banks alive. Bitcoin was introduced to battle zombie banks and quantitative easing, and the price has exploded higher in response to the increase in global reliance on the accounting fraud and chicanery of QE. There is no end to QE. There is no scenario other than all fiat everywhere crashes to zero, as all fiat has done over 300 years. And there is no top to the Bitcoin price. $1 million and above is virtually a certainty at this point. Now, I don't know if I can agree with him that $1 million and above. This is not financial advice. I'm not a financial advisor. I'm not going to try to tell you that Bitcoin's going to go to $1 million. I have no way of seeing into a crystal ball. However, I do believe that it's going to go up considerably from where it is now. And if someone like Max Kaiser says $1 million, I suppose it's possible. Why not? Bitcoin, a hedge against economic uncertainty. If a genuine connection between QE and Bitcoin's price is to be seen, then a clear definition of Bitcoin's asset status needs to be made. Seemingly in accordance with Kaiser, economist and CEO of global macro investor Raoul Pal has been especially vocal in this topic as of late. As he stated, I view Bitcoin as an option on the endgame of the current monetary system. No, it is not a good day-to-day macro hedge. It's a macro systemic risk hedge. However, that's very different. It does play a decent role in capital flight too in emerging markets. Obviously, we see a lot of money go into the cryptocurrency world as other parts of the market tend to tank. And as more stable parts of the environment continue to fall apart, people are looking for riskier assets to put their money into, and Bitcoin being one of them. Wall Street veteran and member of the Wyoming Blockchain Task Force, Caitlin Long, similarly believes in Bitcoin's budding utility as a hedge against economic instability. Long lambasted the fragile nature of the financial system, referring to last week's repo events as a modern version of a bank run. Nevertheless, Long maintains that it provided further confidence in Bitcoin. She was stated as saying Bitcoin is not a debt-based system that periodically experiences bank run-like instability. In this regard, Bitcoin is an insurance policy against financial market instability. Bitcoin is no one's IOU. It has no lender of last resort because it doesn't need one. Kruger appeared to agree that Bitcoin is only a hedge against the additional tail risk of central bankers and or governments losing control. He also stated there is no evidence Bitcoin has benefited from prior QE rounds. However, the more ingrained with traditional markets Bitcoin becomes, the higher the impact one should expect. The QE impact should be significant, but if by then Bitcoin is already behaving from a macro standpoint as digital gold, why is it not yet the case? How likely is QE anyway? While the ongoing repo agreements hint to some further measures to avoid inflation, it isn't exactly concrete proof that QE will be initiated in its traditional sense. However, if the Fed continues to follow the global monetary policy of other sluggish economies, it will perhaps be an inevitability. Personally, I don't have a lot of faith, sorry to say, in the government's ability to pull the economy together at this point. I really don't. I'm really concerned about our future financial status as a country and of our fiat as it stands, which is one of the reasons why I personally am looking towards cryptos. Thanks to the possibility of a looming currency war and the subsequent economy depression that it may bring, a Reuters poll relays that the median probability of a U.S. recession in the next 2 years stands at 45%. With such high estimations of a rising recession, it seems almost undoubtedly that QE will continue and proliferate. I don't know, what do you think, guys? You think we're going to see more quantitative easing? You think we're going to see the Feds print more money? Let me know. Drop me a line down below. Let me know what you think. Sounds pretty scary to me. I'd be really curious to know your thoughts. As for a consensus on Bitcoin's potential reaction to quantitative easing, it's perhaps too early to tell, while numerous outcomes such as systemic breakdown and escalation between China and the US, or even something as simple as an increased risk appetite, could all lead Bitcoin higher. There's no real precedent to allude that it will. Nonetheless, a predilection towards using Bitcoin as a safe haven is seemingly on the rise. More and more people want to use Bitcoin as a safe haven to get away from the economy, to get away from the quantitative easing and these economies that are not doing so well. And if sentimentality is anything to go by, the market dictates at least some movement from Bitcoin following economic strain in the future. So if our markets continue to go through the strains that they have been, and we continue with all the trade wars and all the currency wars and all the things that are going on, I think that we will see more quantitative easing. I think we will see lower interest rates, negative interest rates. And I do believe that all of that is going to be good for the Bitcoin environment. German banks, they're boosting Bitcoin, and they're doing so because negative interest rates are hitting every account now. Bitcoin cautious Germany has seen its first bank demand that ordinary savers pay it to hold their money, even as little as €1. On November 19th, the BFR in northern Bavaria is now charging 0.5% negative interest rates on the smallest deposits. They didn't used to do that. It used to be just large deposits. Now they're charging negative interest rates on any deposit. In Germany, negative interest rates previously impacted only deposits above €100,000, which constituted an interest-free allowance. VRF's move makes it the first lender in the country to target savings below that level. The negative interest rates are spreading to even lower economic classes, not just for the more affluent or that are able to hold €100,000 or more, but actually for someone who has as little as €1 in the bank. They now have to pay negative interest. Now, this could open up. Germany could be opening the floodgates for the banks. As Cointelegraph reported, negative interest rates are beginning to form part of the ECB's monetary policy. And the phenomenon ultimately means that some portion of savers must pay banks to hold their money. Critics have warned that such moves would incentivize the public to move into cash, while alternatives such as Bitcoin also stand to benefit. By contrast, Bitcoin does not suffer from the inflationary meddling in its supply and associated destruction of its value, meaning hodlers would never be forced to pay to own it. If you put money in a bank account with a negative interest rate, you actually have to pay the bank to hold your money for you. With Bitcoin, that's not the case. You can hold as much as you want and you don't have to pay for it. So we're seeing a lot of movement on the market at present. And Oliver Mara said he noted that the ECB's decision to cut its benchmark interest rate for banks from 0.5 to 0.4 was the cause of the upset. On a side note, I've done a previous story. I did a previous video where I was talking about negative interest rates and how the European countries who have been using negative interest rates now for 5 or 6 years are starting to say that their economies are falling apart, even with the negative interest rates. Although it did in the beginning, it has not been able to fully achieve what they were looking for and has continued actually to be a negative force in their economy. So negative interest rates are, although they are touted by a lot of people as being the greatest thing, a lot of European countries are coming out now actually stating that it's not doing so good for them. Germany has a new law that they proposed, which would legalize banks to hold Bitcoin, and a new bill in Germany could enable banks to support the sale and custody of Bitcoin and other cryptocurrencies. Previously, in the past, they would have had to have some type of actual custody company to be able to hold the crypto for them. They're now trying to pass a law that would allow banks to hold it itself. Germany is on its way to becoming a crypto haven. At present, German banks and financial institutions are prohibited from facilitating the sale of cryptocurrencies for clients. If passed, the proposed bill would transform the status quo. While an initial draft of the bill had reportedly included a separation clause that would have required banks to make recourse to an external cryptocurrency custodian, as I was just telling you, or some kind of dedicated subsidiary. The latest version of the proposed law removes this, and it will streamline banks' cryptocurrency-related operations, as Handelsblatt outlines. Starting in 2020, financial institutions will be able to offer their customers online banking virtually at the touch of a button, along with classic securities such as stocks and bonds, as well as cryptocurrencies. Sven Hildebrandt, the head of Distributed Ledger Consulting, was cited as saying that Germany is well on its way to becoming a crypto haven. The German legislator is playing a pioneering role in the regulation of cryptocurrency. Notably, the Association of German Banks, a major lobbying group representing over 200 financial institutions, is reported to be supporting the bill. So it sounds like they've got a lot of support, although not everybody is totally on board. The Bundestag has recently published a statement determining that cryptocurrencies such as Bitcoin are not real money, citing their volatility and allegedly limited use for payments. The statement towed a cautious line regarding stablecoins, highlighting their potential to disrupt the existing monetary system. Once again, somebody worried about corrupting the existing monetary system. Whenever we talk about Bitcoin, whenever we hear governments talking about Bitcoin, they're always talking about the same thing, disrupting their monetary system. It's obvious they're scared. They wouldn't be if Bitcoin wasn't a threat, if cryptocurrencies weren't a threat, which is why we're seeing so many of them pushing, so many countries and so many places, so many central banks now pushing and doing research into these cryptos and into digital currencies to be able to figure out how they can get a piece of the pie and stay relevant in the world of finance. Because as cryptos become bigger and bigger, more and more banks are going to start losing out, which is part of the whole disruptive nature of Bitcoin and what it was created to do to begin with. So having said all of that, I'm going to go ahead and close this up now. This has been a long video. There's been a lot of information. I hope you all found it interesting. Thank you very much for being here today. Please do me a favor, subscribe to the channel, click the little bell notification so you can be notified when I release a new video. If you found anything here interesting, you can click the like button for me. That would be great. I am looking forward to doing my giveaway with that book, like I said. So please share this video with as many people as possible. When I do get up to my 100 subscribers, I'll go ahead and do that drawing for the book. So thank you all very much for being here, wherever you are, whatever you're doing, whatever time it may be. I hope you're having a great day, great night. Thank you very much for being here, and I will see you next time. Bye-bye.